Deep Dive with David Stendhal, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis.
Hey, it's David Stendhal with tonight's Deep Dive. It is June 12th, 2018, and tonight I'm going to be talking about crude oil, the ETF being USO. Got a mixed bag here when it comes to the trends. We got short to the downside, and we got intermediate and long-term to the upside, so it's definitely a mixed bag here. The technical rating is still positive, and we just recently had a wave low that triggered here in crude oil, as well as in crude. We had over the last 4 trading days a number of things that have triggered here on the pro alerts. We've recently had a doubt low, a pop low. Those were 3 and 4 days ago, and then today we had a stretch low and a pulse low that have occurred in crude oil. So all of this, between the pro alerts here as well as this wave low, would normally be quite positive for the market. So first, here are the pro alerts. You can see that the 4 are showing up here at different days, obviously, but they're all calling for a stoppage to the sell-off and then a potential bounce to the market. So we have had a bit of a bounce to the market. The issue is, if we take a look at this particular chart, again, daily bars here, is that that sell-off was pretty strong, quite honestly, and it's come back up a little bit, but it's nowhere near the 50-day, at least not right now, and it's certainly pretty far away from the 200-day. But this major support right through here, there's this one that spans at 39 and another one at 10 that kind of overlap one another. And when we look at this, I'll just pull this up here a little bit closer, you can see that we dip below it, and now we are just above it, at least on the high. The close of today is right on this support level. So I'll just use this one since it's a little bit newer. 66.29 is the actual resistance level to the market. Through here it's 66.24, so you can see that they're very, very close to one another. The point is that we're butting up against that right now. The pro alerts, this low that we were talking about here with the wave low that triggered here, they're suggesting that the market has sold off and is going to bounce and is going to rally. That's what they're suggesting. Now, short term, they have actually rallied a little bit, but the rally that we would expect based upon those pro alerts and the wave low would really more suggest a breakage of this particular resistance level, and as a minimum go up and touch this resistance level through here. So as a minimum, it would be looking at 69.22. But the issue that I'm having with the market right now is this resistance level. So if we're not able in the short term, the next couple of trading days, at least by the end of this week, if we're not able to close above this and really start to show some surge to the upside and start approaching the 50-day moving average, or this this level that I was just talking about through here, the 69.22 level, that's where we would expect the market to head. But if we're not able to obviously break above and stay above these levels through here, then I fear that the market really is going to start to sell off here. Now, our systems right now are actually flat the market. There's nothing going on with crude. We're not long or short anything. This one, heating oil, just to educate, this particular one says that we're hedged, and which means we have 2 long systems and 2 short systems with an open profit of $4,300. They look the same, but one is flat, meaning no positions whatsoever. This one over here, when it says hedge, we have 2 competing sets of systems, 2 long, 2 short. It could be 1 long, could be 1 short, it could be 3, but whatever the case is, they're perfectly hedged, and so nothing is going to take place until one side is going to unwind itself. So right now, crude oil is definitively flat the market, waiting for some type of definitive movement here. Just to finish up here, natural gas has a small loss here, and it is short and has three separate systems that are actually short. I want to focus here on the fact that the market is flat. So where does this stand for us? Well, as I've been pointing out with this this support resistance level that we've been pointing out through here, we better stay above this, and then the systems with a closing value above that, really getting those pro alerts to really start to indicate that the market's going to really start to rocket to the upside. We should start to see it start to approach the 50-day, and more precisely this level that I've been talking about through here, which will act as the next level of resistance. That's what we would like to see take place. The flip side, since we're always looking at systems, and systems have a legitimate plan for the long side as well as the short side. If this isn't able to hold here, then obviously we'd be looking at the market finding resistance and really starting to sell off. Now, I just want to give full perspective here. Here is a seasonal chart for crude oil, this being the 10-year. The little triangle that this looks like a dot, but it's actually a triangle. That is yesterday's action. And you can see that the 10-day, volatile as it will be, that the trend to the downside is certainly all the way through until mid-December. That's what we would expect. Obviously, there's going to be pops along the way, tradable opportunities, but the general trend is to the downside from a seasonal perspective for virtually the remainder of the year, halfway through December. So again, we come back to this resistance level that we're up against right now. If we're able to break above it, it may not necessarily go that far to the upside if we're actually able to break above and go to these levels that I've been talking about. If it's actually going to find resistance here, then the market has, a fair amount to really fall, and you can see some specific levels we could be looking at. The first downside level would be 61.96, just call it 62 if you will. That would be the first downside action to where the market could go. That's not really strong support to the market. It's only a 6, but the 200-day might actually be a better condition. So somewhere between 60 and 62, big mark, I know, but that's where the market theoretically could be headed if we don't find support to the levels that I've been talking about. Our systems are simply going to watch and react. And so right now they have no skin in the game. They don't care if it goes higher or if it's going to go lower. But we do know that with the support and resistance that we're actually at right now, that's going to help to dictate which side of the market we're going to trade under the next tradable opportunity. So I'm pointing this out so that if you're trading crude and you're trying to get a feel for which way things are going, this is the level you got to be looking at. And with the pro alerts, they're suggesting that the market was going to have some type of a bottom and a little bit of a rally. It hasn't been super strong, but it has had at least a little bit of a rally. But sometimes these things can fade because it hasn't been strong enough as far as the price action. And if the seasonal tendencies are really going to start to kick into gear, then we could see things sort of drop off here fairly quickly. So we're kind of in limbo right now. The market is most definitely quiet over the last couple of trading days. That's not going to last. And I think there's going to be tradable opportunities here, and it's more along the lines of just simply waiting and reacting to the market as opposed to trying to forecast exactly where the market's going to be headed in the short term. But if it does rally, you'd be looking at the 69.22 level. And if it's able to falter here, I'll give you the two levels again. One's going to be around 62, possibly down to the 60 level. Those would be the targets. The systems will react when they're going to react. So obviously watch the service, watch to see how the systems play out, and we'll see as to whether or not we're able to generate some trades. Got a sore throat here, so I'm sounding kind of funny, but we're going to try to power through a webinar tomorrow. So if you're interested in attending our webinars that we do at 10:30 on Wednesdays, typically, not every Wednesday, but typically Wednesdays at 10:30. I don't have anything posted right now, but you can send me an email and I can send you a specific link. And the way that you'd get to send me an email, just go to contact, send me an email saying that you'd like to attend. I haven't decided exactly what I'm going to be talking about, but we'll come up with something that will be of interest. host, and just sort of go from there and really answer questions about almost anything. I always have a little set presentation. I'll come up with something probably this evening, but then for tomorrow, we'll get into the material, and then we'll leave things open for question and answer type scenarios. You can ask about anything with that we have on our service, and really get a better feel for what it is that we're offering. So with that, we will take a look at another market tomorrow. We'll do our presentation tomorrow at 10:30 Eastern Standard Time, and we'll look at some more markets obviously tomorrow. Thanks very much. Bye-bye.